What's going on, traders? Hope everybody's having a great weekend. Wanted to do a quick analysis on the E-mini S&P futures as well as the NQ, the NASDAQ 100, and see what we might have in store for next week. We're also going to look at some key levels, not only on the weekly chart, daily chart, but also some day trading levels I'll be watching as well. Then we'll do a brief run through of some other data points that we like to look at that helps us formulate a game plan for the upcoming week. So if this is your first time joining the channel, watching the video, thank you so much for joining. Don't forget to subscribe and turn on those notifications as well. It would mean the world to me. And of course, that this video is for educational and entertainment purposes only. No way is viewed as financial advice. So let's get into the video here. And as we always do, we're going to start off here with the E-mini S&P, and we're going to look at a weekly chart here. And we certainly had a nice move. It doesn't look as big of a move here on the weekly chart, but had a big move to the downside on Friday after attempting to break out of this weekly balance that we had been forming overall. You can see this kind of has happened now 3 times. I'm going to zoom in here for a second. You can see that this really kind of has happened 3 times where it's looked above and failed, looked above, tried to make a new high, tried to make a new high. We did make a new all-time high earlier in the week, but now we are right back into our balance range once again. So this isn't exactly what you would want to see for the bulls being able to push the markets up higher, probably in the near term. But let me zoom back out, and there's a couple of ways that we can look at the structure here as far as when would we might be in trouble, or when would the bulls potentially be in trouble. Certainly the angle of attack here is very aggressive, but we are not overbought on our overbought oversold indicator. We're only getting readings of 7.4, so nothing to worry about there. But we've got 2 ways to look at this here, and we can certainly look at this as, you know, a channel, right? We'll just throw that up there, and this is not the best one. I'm going to redo it. Oh shoot, I didn't mean to. Okay, so we've got our channel, right? And so far, structurally speaking, the channel still is intact. When will we might say, okay, there's an issue going on here? Well, I'm going to add in a little bit of more of that. The balance zone range here is just as also you can see how both of them kind of line up with a nice synchronicity. But if we see price move and it's got to get under this trend line, well, then we've got a different story, right? Because then we might come down to the bottom of balance, bounce back up, retest the trend line. Will we do a double bottom here? Well, that's anybody's guess. But if we do see sellers come in on the retest of the broken trend line, there could be a higher possibility chance that we do in fact break through the bottom of a balance and come down lower. So you're going to really need two things to happen here to really see more downside. First thing, of course, the trend line break, the retest, and then the break of the balance. And so I'm going to zoom in here. We'll keep in mind that balance zone, but let's zoom in and just create what we've got right now. And actually, I do actually think we do have a balance already made up. Okay, here we go. So we were looking at this last week, and let me extend this on our last video. Right, so Now, the main key here is going to be basically, right, our EQ, right, our equilibrium, right around 6,000. Nice and easy. It could be a little bit lower, maybe 59.90, 59.89. But if we're holding over that, then we could still see buyers support that big psychological area, right? So we could have price come down a little bit more, come back up, maybe we retest. But the main thing is getting back over 61.60. And really we need to start seeing some daily closes over that level and then we're outside of this balance, then we can see the next big move for price discovery. With that being said, now for the bear case, if we do start seeing those daily closes underneath that 6K, then we're going to be seeing a different story. We do have the weekly low from the week of the 3rd, the week of the 3rd. So there might be a little pit stop right around 59.30 area, but usually when we break that balance, we would be more than likely to look and traverse back down towards the other end of the range. So that could take us down to 5,900, 58.50. And ultimately, what really needs to hold here, the main thing, we have a double bottom, really that's created the lows of this structure right here from the week of, let me delete that one, from the week of December 13th, right here, and then the weekly low from back in October 21st, right? So this is going to be key here, these two areas of confluence that needs to hold. So basically 5,800, 58.10, anything under that, it will be not good. So under that, then we could expect potentially, right, the break comes back up, retests, and we head back down lower once again, right? And where might we go if this happens? Well, we have a prior area of balance right here. So around 56.70. So look at the weekly highs from back in the start of September, the end of August, and you even got back in July the highs here. So these wicks very well 5,700, 57.09. This area could potentially also offer some support as well, and you can see there they do also match up pretty much with the weekly lows from October 7th. So have to pay attention to that as well. It could stop there. That is certainly a possibility, but I'm mainly going to be looking at the highs from back in September. All right, so let's also take a look, and we forgot to look at the economic calendar, but we're in a groove right now here on ES, so let's go and finish with that first. Let's look at another chart that we have been monitoring. I will come out of the balance here, and let's go ahead into the main daily chart that we have been working with. Okay, now we have closed pretty firmly below the 9, 20, and 50 period moving average. So that is a little bit concerning here on the daily chart. Again, would I want to be short in this hold? No, not really, right? What would I be looking for if I was thinking there could be more downside in the market? Well, it would be a move back up here into into 60.60, right? And that gives us about a 25% retracement, which we've been spoken about many times on the video. 25% retracement back of that daily range candle, and then we start to head lower. And this brings us right back. I have a level right here at 6002, basically 6,000. And we know from our balance chart that we just looked at, that's that equilibrium. So again, we start losing 6K, we start seeing closes under 6K, that is not going to be a good look. The other thing, of course, the other potentiality, if we don't get a 25% retracement, which would be the most bearish, I would say, retracement if we do get a bounce. You know, if we're hanging out underneath here, what are we going to basically be forming? Nice little bear flag for that move down there on the daily. But we could also see price do the 50% retracement, and it pretty much lines up with this level right here that we already have plotted. 50% of this daily, Friday's daily range takes us up into 60.83, 60.80. In that area, another area where personally I'd be possible like, okay, maybe I would want to try a short here. The only issue I have with that is that, you know, where is that first target? Well, I mean, it's still about 30, 40 points down here. So 80, 83, 80 down to about 60, only about 20 points. So it's not that much, but it could come down here after that, and we could see that be supported and push up higher from there. But if you're bearish, obviously, you know, we're taking partials there, and obviously we're looking for further continuation, you know, to the downside, like so. After we broke back under that 60.60, and then we would just be targeting the equal low once again, right, as the next target, and then under that, well, trying to get down to 6K even. Okay. Why isn't this deleting? There we go. Okay, so that's what I see. Now, what would the bulls need to do, right? The bulls, for me, if we start seeing daily closes back over 60, 80, I think that that is a positive sign. We start seeing, where's my candles? Okay, we start seeing some candles close right here, like so. Then I think it would be more likely that we would come back up to around that 61.10 area. But really, we want to see back over 61.10. That's going to totally neutralize the trend. And then at that point, well, we're just going to look right back towards that past swing high up around that 61.60, 61.50 area. I think would be my next target if I was long in that scenario right there, right? And ultimately, we want to see, you know, you want to get to those all-time highs, but that would be, in my opinion, the likely area that we might head. All right, so showing a little bit of weakness here on our Momo, and I think that's about it on the daily chart for me for ES. Let's just go through the day trading levels, and then we'll go back into the economic calendar. Okay, perfect. All right, so what do we got here? All right, we're here on a 30-minute chart, and right, we do have, it looks like we hit a little bit, it seems a little basey here. And again, would I be looking to short the market on Monday morning? No. Personally, definitely, you know, I don't like shorting the whole. We like to wait for those retracements, and that's the important thing, right? So what again could potentially happen? Well, if this, I'm going to use Friday's lows, which is pretty much 60.20, right? 60.23, 60.20. We could see a counter trend move back up to about that 60.60 area. We already kind of was talking about that area on the daily chart as well. So that's important. That's about that 25% range. And then we can go back down. If we see that acceptance over 6060, we'll call it, well, then we're going to probably see that move up into 6081, 6080, and that's about that 50% retracement right there. So we've already been over this potential scenario, whether it rejects right there or we come back up, maybe we double top, maybe we get stuck there, or goes ahead and breaks free, right? In which case, then we've got 6100 basically to deal with, whole number psychological, maybe we peak a little bit above and we see the 6105, something like that. Now, what would be the worst scenario for the bears or for the bulls, right? We've come underneath. We start to see maybe 30-minute acceptance underneath that 6025 area, certainly below the 6020. Well, we're in trouble then, and I would be looking back towards that 6K. And then under that, if they do break, we can get a little bit more down into that 5987 area, possible area of support as well there. So we'll see what happens. But if this breaks, come up, retest, boom to 6K, back down to this area. So that would be my bearish scenario right there. Could find some support in the 80s there. So watch out for potential bids. But either way, anything still at that point is just considered a counter trend bounce. So even if we come back up to back test this area, what's really happening? Well, it's just a higher, it's just a lower high being put in the trend count, right? So it really would not make a difference. It would still technically be, bearish, right? So that is something to consider as well. All right, that's everything I really wanted to go over for ES on the weekly, daily, and from the day trading perspective. Let's flip back over to the economic calendar. That's the wrong thing. This is the right thing. All right, so for this week, let's get into it right here for what we have. Monday, nothing scheduled on the 24th. And for Tuesday, we have consumer confidence, which has not been good recently, at 10 o'clock. 11:45, we have some Fed speak coming in from Barr. Barkin also will be barking at 1 o'clock on Tuesday, so we'll see what they have to say. Wednesday, nothing really going on, new home sales, but we have some more Fed speak for this time from Bostic at 12 o'clock. Thursday, initial jobless claims, let's pay attention to that. Tight eye always on the labor market. We'll get some GDP information as well at 8:30. Right before the bell opens, we do have a little bit more Fed speak from Kansas City Fed president. And then we have Bowman speaking at 11:45 and Cleveland Fed president at 1:15. And look at this, then we have Harker once again at 1:15 for Hammock, and then 3:15 for Harker. So a lot of Fed speak today. Friday, PCE coming out, core PCE, everything on that front, 8:30, paying attention to that for sure. Other than that, we do have a little bit more Fed speak at 8:30 before the market opens, and Goolsby at 10:15 at night, which is interesting. Okay, I'm glad we got that out of the way. Okay, let's move along to NQ and see what the nasty NASDAQ is up to. And this is right. Boom, boom, boom. Let's get into our weekly chart. Okay. And here, did I save this one as balance? No. Okay. There we go. Delete this. Okay. So, very similar situation here, of course. Whoops. Very similar situation as far as the overall trend and channel is concerned. And this will be, I'm doing this very loosely. Okay, pretty sloppy, but you get the idea right here. Same type of channel as ES, and as we saw before, we also have that same balance, although we did not make a new all-time high here, but a similar look in the look above and fail. You can see we are the head of the weekly candle here, just trying to peak above the highs of the week of the 10th, and then failing back under. Whoops, and then failing back under. So let me just see if I can line it up. There we go. Right, looked above, came back down, failed. Right now, of course, we're going to have our equilibrium right in the middle. Right, and so that's going to line up right around that 2150 area, 2145. That starts to give up. Then we'll look for further downside and the retracement to the bottom of the balance range, right? So very similar situation right here. I will say, just offhand, looking at the whole wave, I'll keep an eye on 21,750. If we come back up and retrace into that area, it could be interesting to see some sellers there. But just like we were talking earlier on that daily range, we can also use that same concept here on the weekly candle and look for whether that's a 25% retracement of the weekly range, or if we're going to be looking for a 50% retracement of the weekly range. Either one of those could potentially set up for that next move to the downside. And that 50% retracement of this week, of this past week's range, is basically the high from the third, right? It's very close. So it's at 21,963. So that is about 50% right there. And also it is the previous week's high as well. So big area right there at that 50% area right around 22,000. So that will be interesting to see how the market reacts if we do get back up into that area. All right, I'm going to pull back up the balance now here that we have. And so let's get this one into the daily. Why not? So here, same thing, we can use this daily range as well. So We've got our equilibrium. We basically close what on 660 here. All right, so let's see. Again, I'm not interested in shorting the whole, but we would look for retracements. I mean, this is a bigger one, taking us back closer to that 2200. But as long as price stays below 22,000 and ultimately 22,125, I mean, that could be a scenario. But we can also see retrace to here, and then we come back down towards our equilibrium. I would be more in the camp that probably we only get about a 25, maybe a 35% retracement. We'll see how things start to react in those 750, 800s. That could be a spot where we bounce up to and then head down lower, but it's anybody's ball game right now. We closed very close to the lows of the, which day is this? Oh, excuse me, the lows of the 11th. So I'll be paying attention to that as well. The lows of the 11th was 21, basically 670, you know, so we're right on it. Anything below, I would say, so the bulls here from the daily need to get back over 22,000, need to get back over 22,130 for that all-time high attempt. Otherwise, we could also just stay trapped in between this part of the balance. That's very possible as well. But otherwise, if we break underneath that 21,460, that would be the most bearish scenario. Again, we're not looking to necessarily short right there, waiting for the retest, and then we're targeting back down the lows of balance towards that 21,000, 20,090, and then really the bears are going to get some steam if we start to see some acceptance under 20,750, we'll call it. Right here, we get under that, kaboom, kaboom, and then that won't be too good. Where might we fall if we break that balance? Well, I think that would be the next question to see what would happen. And it's possible, right, we might, we'll be looking here. The highs from, let's see, the 11th of November and the 4th, right here, is interesting. Right, so it could be, let's see if we can get it, around 20,600, and then the lows 20,300, right? And you can just slap a midpoint there for equilibrium. Right, so that's what I'd be looking for potentially if we do really start to find that acceptance under 20,750. All right, now let's go ahead and take a look at some day trading levels on NQ, and then we will move right along. I don't want a 4-hour chart. Let's do an hourly. Okay, here we go. All right. So, I would like to see some I want to see this back over 21,000. 670, 675. I want to see some candles hanging out right here. Right. Then we can look for a little bit of a bounce. We've got, and we were talking about this 750 area before, but my line here is actually 21,740. But of course with NQ, you got to give it some wiggle room, 5, 10, 5, 8 points, 10 points is pretty much very close to the same thing on NQ, right? Now, we could come up. That's where we might find the resistance to come down and break through. I will also say, though, now we had almost a 500 point down day on NQ on Friday. A big burst of volatility. Markets are running or resting. I will also throw up a sign of caution that yes, we might have a bit of a counter trend move on Monday, but it would be more likely, in my opinion, that we do get a bit of a counter trend move, but we just end up bouncing around, right? We don't see that wide of a range on Monday, so we could, in theory, just get trapped up in this area, right? But if the bulls are able to find acceptance over that 21,740, well, then we're going to look, at least I'm going to look, I should say, back towards the figure 21,800. I think would be fair to say next, and that could be big for the bears to short as well. Now, of course, we can bounce then right off the pivot at 740, and it's that same scenario where we were speaking about before. But it's very possible, again, that we just get stuck in this range, maybe Monday or Tuesday. I do have a lot of Fed speak, though, so we have to pay attention to that. I just wanted to see, go back to the daily really quickly. All right, so we are still holding the 50 on NQ, but on ES we are not. The 9 and 20 have been breached, so I just kind of wanted to look at that really quickly and see about those levels. Okay. So what happens if we see acceptance over 800? Well, got a decent amount of room there that we can work with, right? I would say, I don't know if it can go the full 100 points back to 21,900. There's a lot of traffic right here in this area. If you look from over here in the 21,850s, might have some issues. But as we are still looking at this move here as one daily candle, if we're looking at that, right, 25% probably would be, is in about this range, right? The 50% retracement from here to here. And we could actually, if we wanted to, get a blank chart really quickly just to see. I was very close on my 50% there. Oh, it was just a little off, about 20 points off. But it's also the high, right? Look back here, this highs and the low from here, right? So you got your 25% basically covered up into the 780s, 21,787 to be exact, and 50% to be exact is 21,942. That would be pretty impressive, but definitely doable. I think we'd be more likely to get stuck here around the 870s though. But if you want the 50% retracement, there it is at 21,940. Okay. Let's keep moving along here and take a look at some of our other points of data that we like to look at. All right, what is the 10-year doing? The yield curve, nothing too much. VIX 1 day, big spike off of our, when we get into this complacency zone right around 7 to 5. Usually that's when we see the volatility, and we did get it once again here. Now getting readings over 15, as long as it stays over 15, can see higher prices, more volatility, maybe back up into the 21 area, 2150 area. So volatility looks strong here. Let's look at how many stocks in the S&P are trading over their 50 period moving average and 200. Okay, I will say for the amount of downside that we saw on ES, this is pretty impressive. We still have the 50, we still have the 50 period moving average. How many stocks are in the market trading above it, above 50%? So that is good. I was actually, when I looked at this earlier doing prep, I was thinking that we would see this reading back below 50. So this is really telling me, I mean, even though we had that move down to the downside, breadth overall here, it's not too bad, not too shabby. Nothing really to report here on the 200, just again, back testing kind of this balance range that we were in, and that's kind of where we stopped, right around that 63% reading. So as long as the SPX AR50 holds over that 50% retracement, that 50% line, then I would say that's a little constructive, an area of hope there. Let's look at new highs versus new lows, just below the zero line, basically on zero, so really not too bad there. Let's look at the junk bonds. What are they telling us? Okay, still the junk bonds have been pretty good at calling these kind of divergences or tops, making a new all-time high in SPY, and it was a lower high on the HYG. And we still have this supply zone that we kind of mapped out here between 79.82 and 79.60, and that's basically where that lower high was put in and coming back down. And if we look at the S&P as well, this is just the SPY ETF here for ES. We did basically hit this trend line once again, major trend line. Look back from 11.11 from here, boom, 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 and big reaction. You can see here when we broke this trend line, we fell down hard. Big sellers when we hit it here, big sellers when we hit it here. All things being equal, why wouldn't we potentially come down and test the low of this trend line? Well, we probably would need under, or right around, we start seeing SPY under 597.30. I think then we would be very likely that we would come back down maybe into 592 area, right around in this trend line here, and then maybe we could see a bounce of some sort. All right, let's go on to the bonds. All right, 7-year picking up, not looking bad here. 7-year picking up, and we're having our ratio between the 20 and the 7 starting to break the 50. So this is actually constructive, I would say. Overall, you do have a little bit of a divergence here, of course, on the TLT and SPY. You can see this is a ratio between both of them. This is dipping down, this is coming up. I would say that's not the best look right there, so I'm definitely going to be paying attention to that divergence. Slight momentum shift here, though, for TLT as it is trying to push up higher. It's interesting here, we're seeing the TLT move up. Usually it moves down, or before in the past it would be moving down, and when the market would be going down. But bonds coming into this big area of potential resistance at 98.80, so I think that it could see a drop here, and watch for TNX to possibly react as well, especially considering the divergence going on right here in our ratios. So that is interesting, but as long as the TLT holds 88.40, I don't really have an issue. Can just bounce there, and I'm still thinking over 89.80, and then we can go ahead, and I think that 90, real close to 92 is in the cards. 91.83 potentially could be the next target for the bond bulls, I'll call them, if we get over 89.80, looking at 91.80. So there we have that. Where do I have TNX is the question. Oh, I have it on. Okay, let's see what the Dow looking like. Okay, no divergences here. Be interesting to see what transports end up doing right here. Volume point of control on the daily and the 200 so far being supported. This is kind of make or break here for me for the Dow, which was down 700 points. If we start to lose these October highs right around 43,335, well, that won't be good, and we probably will see more selling to the downside, but it could be supported here. I'm not interested in being short in the whole. I think we could find a bid here and likely to bounce, maybe just retrace back up to that 43,680 area. That is a potentiality as well. But no real divergences there to kind of point out. Let's look at the dollar and the yields. Okay. Now we are under 45. That is good. Under 44.80, which is good. So if we do, and we're kind of almost at a double bottom, almost at the low from February 1st, right around 44. That's 44.11. So we do have the potentiality that it see some type of a move like so, bounces, right? If TLT, if my thesis on TLT is correct and it pulls back, we'll see TNX come up, retest this 44.80 area, and then resume back lower down to 43.60s. And this is technically, if this happens, bullish for the markets, right? All right, so what's going on in Dixieland? Well, let me get this up here. Okay. All right, so for me, for Dixie, it's not quite overbought yet, but it's trying to find some support here around that 106.20, 106.40 area. Finding support, but really, right, we have, I mean, if I got to zoom out here, right, we can even go from here, swing high, lower, high. What happens if we come up here, right? Just another lower high being put in. So as far as I'm concerned, not really too bullish on the dollar. We start to neutralize the trend a little bit if we see price back over 106.80. We'll call it 106.90. We see that happening on the dollar. That will start to neutralize the trend, but really need to get back over 107.33, back over this equal high, and we start seeing price hang out here. Well, then it's definitely going to be a little bit more neutral to bullish, where this would be a little bit more neutral to bearish, and staying underneath is still bearish, right? But over that 103, over that 107.33, then I'm looking for the dollar to probably come back up and retest 107.75 area right up into here. Does it reject? It could. And, overall, honestly, that really, I mean, I'm looking at this at a 4-hour chart, but, it would really, really need to get over 107.75 to get some legs again. All right, let's keep it moving right along. What's the put-call ratio doing? What is just the plain old VIX doing? Okay, looks like people are starting to load a little bit more puts, but nothing outside of the normal range. So that is fine. VIX really still holding that 15. We've talked about that being the benchmark for a while, back over 15.75. And look where we stopped, right at the top of our balance range, right around that 19, right? So, boom, right there. As long as we're over 15.75, consider more volatility in the works. But for extreme volatility, well, we've got to get over 19 and got to get over 20. But really, the VIX, it does not really like to be up in that area too much. You can see really what happens when it starts to travel in this area. So here, as VIX is coming into this big area of potential, where it has failed many times, would I want to be short, looking for the VIX to go up short on the markets while I'm waiting for VIX to come up while it's coming into an area where it's rejected many times? No. So this, to me, gives me a little bit more of that, okay, we're probably going to see a little bit of that counter trend move on Monday, possibly Tuesday, and then go from there. All right, let's see what else is going on here. Let's look at the skew really quickly. All right, still pricing in some risk in the markets in general, elevated still. Okay, so still risk on the horizon overall. And let's look at the VIX internals really quickly. Okay, nothing big push down. It was interesting here that I noticed that this contract hit 88, and that's exactly where it rejected. But we're still in contango, so nothing really to be too worried about on that front. And the VVIX, the volatility of the volatility, back over 103, back over 100. Let's see if it sustains over 100. That would also lend to more volatility, but really needs to get back over 105, and then the volatility can really start to kick in. But that's not neither here nor there quite yet. All right, and is there any other thing that I wanted to go over? I think we have done it. Okay, guys, well, I really appreciate you taking the time here to prep for the upcoming week. I wish everybody a great trading week. Make sure you follow your rules, and remember what we say at the end of every video: trade your plan your trades. A profitable trader is a prepared trader. The money's made when the market is closed, and that's the most important thing. So I wish everybody the best of the rest of your weekend, and I hope you all trade well and safe and smart this week. All right, guys, have a good one. Take care. See you later.